All right, everyone, a very warm welcome. Today, we're gonna do our week ahead macro event analysis. So, the date is 23rd of June 2024, and it is almost 10:30 p.m. Eastern Time from my side. So, before diving into the next week, what we're gonna have, let's just quickly have a look where, or let's just say what we had last week. So last week we had three central bank decisions. One was from RBA, which was held on Tuesday, June 18th, and then we had where was I? Thursday, June 20th. Swiss National Bank, we had that decision, and then we had Bank of Canada, Bank of England, coming out at 8 a.m. Atlantic Standard Time and giving their monetary decision. So we will go through all of these central banks and what they did and what their stance was. It was hawkish, dovish, or neutral. We will go all of those views, and we also had some other macro events. And if we look at from China side, we had industrial production, retail sales. We had a bit mixed bag over there. It was a nothing burger. On Monday we had Empire State Manufacturing Index. So the thing to look at these indexes, these are like never came in with the market expectations. It just goes beyond the market expectations, and there is no clear edge trading on these events. So that's why I don't like trading Empire State Manufacturing Index, or even it's there if there's a Philly Fed manufacturing index. I don't like trading all of those because the reason is right in front of us. Look at the market was expecting negative 12.5 and it just came negative 6, and before that, look at these expectations and the difference between the actual and difference between forecast and actual numbers we had from couple of last datas. So with that being said, let me just close this out. Okay, so on Tuesday we had core retail sales, and retail sales came worse than expected, and also it aligned with the revision was got down from 0.2% to negative 0.1%. And from retail sales month on month perspective, it also came in line, and to the showing some sort of cooling, and got revised from 0.0% to negative 0.2%. So what we had on Wednesday, we had CPI inflation report came out from Great Britain. Pound came in, it was a mixed bag. However, we do saw some relief from inflation side. The prior was negative, 2.3%, and we had actually 2% inflation coming year of year. It was totally aligned with what the market was thinking. So there wasn't much move we could have caught on this data. However, it's it's a pretty good news for the Bank of England that the inflation is moving to the right direction with the current monetary stance. Let's move forward, and we had New Zealand GDP quarter of quarter came a little bit above the expectations, came 0.2% from prior 0.1%, and we had negative 1% from the last quarter. And China 1 year LPR, 5 year LPR, as expected, kept right there. It was before, and they have been keeping there since February. Okay, so then, except these two central banks, we had Unemployment claims, building permits, Philippine manufacturing index. As I said, there wasn't much conviction there to trade these events. Just unemployment claims came in a healthy sector, staying in 238,000, and the building permits 1.39, and the Philly fact 1.3. So as you can see here, let me just show you the graph. So it always goes beyond the market expectations, and gives a clear deviation there. But it's not just like doing for one time. It does every time. Every time we get huge deviation between what the market forecast and then the difference between the forecast and the actual numbers. So there is not a clear edge to trading these kind of data. Moving forward, we had Great Britain pound retail sales coming out just with the with aligned upward, or let's just say better than expected, 2.9%. Market was forecasting 1.6% actually. It was the last day of the week, or let's just say trading session we had last week Friday, and there was bunch of flash manufacturing services PMI coming from Europe, from Great Britain, and from US side, and we also had some core retail sales. Overall, we had a weaker PMIs coming from Europe and also from Britain side, and we had but uh, better numbers than market was anticipating, and the manufacturing is also got revised, going up from 50.9 to 51.3. So there was this thing coming better than expected, or the market showing that the services and the manufacturing sector is pretty much sitting in a soil state, actually gives the hard time for the Fed to start cutting their rates. So now let's move to the main events. So let's talk about the cash rate we had from Australia. Okay, so Reserve Bank of Australia came and kept their interest rate at 4.35%. And let me just bring in my last week analysis, and 97% of the market was pricing in that there is gonna be no cut from this bank. Neither they're gonna hike, they're just gonna hold. There was a 97% chance. And from the last meeting, RBA surprisingly kept rates unchanged. However, what they did, they increased their projections report. Let me just get my report. It was just here. So on their last meeting, what they did, they increased their CPI inflation report. On previous one, they said 3.2%. It's gonna be for December 2024. They revised it, and they put the number 3.8% for at the end of June 2024. That's what they are thinking that CPI inflation is gonna be for June 2024. They increased their projection from 3.1 to 3.2%, and the unemployment rate they decreased for December 2024 from 4.3 to 4.2%, and for June 2024 they decreased it from 4.4 to 4.3%. So with that being said, they also, the board remains resolute in its determination to return inflation to the target, and is not ruling anything in or out. So by saying that, they're just saying that they are not ruling anything. They're gonna cut rate, or they're gonna increase the interest rate, just staying neutral, and they also forecasted that the rates will stay at 4.35% until mid 2025. So the last meeting, it was pretty much the hawkish stance they took, and not the last meeting, the last meeting. Okay, so it was like what was that date? I actually don't remember. Let me just see if I can find out when was the last decision we had. From May 7th. All right, so on May 7th they went and let me just drink some water. All right, so on May 7th 2024 they came out and without changing anything in their policy, they just stayed they increased their projections from inflation side, from unemployment side, and from the the cash rate side, and that was a somewhat of a hawkish stance they took, and that's exactly what they did on this meeting. They didn't change anything from a policy side. What they did is they just kept everything the same. If we look at the article we have on forex.com, Justin Lowe who published it, and he stated that he took some key points from the statement they released, and if you look, we had first what they did, they kept their inflation, the cash rate at 4.3%, 90% chance. We already know that they're not gonna increase or decrease their interest rate. So the next one he highlighted is that inflation has fallen substantially since its peak in 2022, and that there was some sort of a dovish comment we had, and conditions in the labor market eased further over the past month. So also dovish comment. How it was some sort of a mixed bag we had. If we look at the returning inflation target with a reasonable time frame remains the highest priority. So that is the hawkish comment. And the next we had is inflation is easing, but has been doing so more slowly than previously expected, and it remains high. Right, you're seeing that what they're doing, they're just trying to stay neutral. They're not saying like, all right, we see that inflation is coming sharply down. The biggest part for these central bank decision makers is that don't scare the market, don't create much volatility, because they know if they say something out of the line, and it definitely gonna create some volatility and can weaken or strengthen their currency. So that's why they choose their words very wisely. All right, so and the last they said RBA is not ruling anything in or out to ensure that inflation returns to target in a reasonable time frame. So that's that with that they're just trying to say they are not ruling anything, like they are not going to increase it or they're not going to decrease it. They're just going to they are open to do anything. They're not ruling anything out. So that was some sort of a neutral stance they took. So if overall, if we look at, it's just, as I said, mixed bag. We didn't get any clear edge on it, what the central bank is trying to say from a sentiment point of view. From a hockey, they went hawkish, nor went dovish. They just stayed neutral. So lastly, just summarize it, that there's no significant changes to the language in the statement. The final paragraph and forward guidance language is more or less a copy and paste from my statement. As I said, just copied and pasted somewhat. The most important bits being that the RBA stresses on the next to be vigilant towards upside risk to inflation, and then that they not ruling anything in or out at this stage. Okay, so that was a statement we had from RBA side. Now the key point was, after the RBA we were having some comments from the governor of RBA Bullock, and he just said what she was saying from from the past couple of meetings. There wasn't anything new she put on the table, but the market really freaked out on this. So she went like, we need a lot to go our way to bring inflation back to the range. And the hawkish comment is right here. There was discussion on whether to hike rate at this meeting. So with that being said, they are actually discussing that do we need more rate hikes rather than discussing that, okay, we are already at a restrictive level, should we start cutting the interest rates? No, they are not discussing that. They are still discussing about the hike rates. That's what gave the reason. It gave the reason to the market to skyrocket to the hawkish side. So that's what we there wasn't it wasn't something new she said, but it was something like market was looking for what they are going to say. So the market took it as a positive side and really bought the Aussie on that side. And the next comment, but decided to stay the course on policy, wanted to make a point that we are alert to upside risk on inflation, difficult to get a read on inflation with just quarterly data. All right, so next comment, let me just get it loaded. So this here she goes. She's a Bullock, the current governor of RBA, and she said we did not consider the case of a rate cut today. So there we go. Another reason to buy the Aussie on that comment. It's just pretty simple. Like, she just said that they are not discussing, even though every central bank is started thinking about cutting the rates. Some of them already started doing that, and she is the one saying that, oh really, well, let's just say we're not gonna do this. Okay, so the comments, let's look at the comments. Okay, so she said but would not say that the case for a rate hike is increasing. Okay, and very conscious that high rates are hurting some sectors of the economy. Inflation is also hurting the people. Use of a villain does not mean a rate hike is coming. All right, so now she's trying to being the neutral. Okay, so here her remarks read a lot like yes but no but then yes kind of script. If we look at the last one, she said we need a lot to go our way to bring inflation back to the range, and she said there was a discussion on whether to hike rates, and after some time she said use of a word vigilant does not mean a rate hike is coming. See, so as I said earlier, they know their words matter a lot to the market. That's why they try to choose words widely there, so that it does not create much of the volatility in the market. So overall, I can say, or I can conclude that the statement point of view, it was a copy paste somewhat, and it was a neutral stance they took, and there wasn't anything new. Governor Bullock put it on the table, and she just stayed neutral, but there was some sort of reason for the Aussie to go higher on the comment that the board is still considering discussing whether to hike rates at the meeting. So it was, let's say, the statements was neutral, and the pressor was a bit of a hawkish. Now let me just bring in that calendar, and after that on Thursday we had a Swiss National Bank monetary policy assessment. As you can see from the red, that is just clearly stating that the market wasn't pricing a rate cut, and we did saw a rate cut from the Swiss National Bank, and they really surprised the market, and we will talk about it. Just give me a second. Let me bring in all the paperwork I had. Was it meant to be here somewhere? Okay. Come on, don't do this to me. just put on my where the paperwork can go. I don't get it. I think I put it in here. Okay, I got it now. So, all right. So if we look at the what was marking pricing in, the market was some sort of 50-50. They were just let's just say they were waiting to see what central bank do. Actually, the main focus they had whether they cut further from the current 1.55% rate, or they just choose to wait, see how inflation develops into quarter three, whether it is expected to tick up slightly. All right. And also on the last meeting, the chairman Jordan said if any upward inflation risk materialized, then this would be most likely associated with a weaker Swiss franc, which we could counteract by selling foreign exchange. So this was a very important point, and we always need to keep in mind that the Swiss National Bank trying to sell their reserves so that they can keep their currency strong. The strong currency actually help them bring back the inflation much quicker and much easier than any other central bank has been doing. So let me just bring in the statement what we had. So clearly they cut and they surprised the market with the cut. And if I bring in the statement, just zoom in a little bit. All right. So Swiss National Bank eases monetary policy and lowers the rate policy rate at 1.25% at the 21st June 2024. So the main point what they did is they stated that the Swiss National Bank is also willing to be active in the foreign exchange market as necessary. They are not leaving that market alone. Okay, hey Swiss National Bank, leave us alone so that we can trade freely. But they're gonna intervene if they saw that the Swiss franc is start to lose its ground, and which can eventually lead to high inflation. So they will try. Maybe they will try to keep the Swiss franc strong on a market point of view, so that they can keep the inflation low. However, look at this. I already highlighted it for you. Okay, so it's easier to understand this way. So the highlighted part, look at this. So from the last March 2024 projections, they saying that the interest rate from a medium point of view, it's end of 2024, it can stay at 1.4, 2025 1.2, 2025 6 1.1, and for 2026 go 1 2 3 4 1.2 1.1. Same story here, some sort of staying 1.2. So what they did is they lowered their projections on policy rate. What they did for current on Q2, they said except from 1.2, they lowered it to 1.1, and they said, hey, it's gonna stay at 1.5 for till the end of 2025. In 2026, rather than staying at 1.1 at the end of this year, or let's just say quarter four, we will bring it down to 1%, starting from the maybe starting in the middle of or at the last of quarter three or quarter two. Okay, all right, I see now. So quarter two, they said they can or maybe bring their policy rate to 1%. So this was the projections was really dovish. All right, so which eventually helped to sell off some franc across the board, and we do saw some sort of weakness in the Swiss franc. However, I will make another video on that, where we were after that at a technical point of view. However, from a macroeconomics point of view, from the central bank point of view, or the the bank really went dovish and they covered the rate. The market wasn't pricing anything for this, and they also decreased their projections report uh, behind that. With that being said, let me just close this out because we don't need it anymore, and let me bring in the pressor, what they said. So Forex Live, they put overall what the chairman Jordan said. So just highlighted some of the key points he said. He said there has been appreciation in the Swiss franc. All right. What he's trying to say is that by buying, so they really bought Swiss franc a lot. That they saw huge appreciation in Swiss franc, which eventually led to decrease their inflation in their country. That has an impact on monetary conditions. Exchange rate plays a very important role as it influences inflation outlook. There we go. So strong currency eventually leads the inflation to come down because their currency is strong. It costs them less to buy the things, and which eventually helps the people to buy more because the currency is strong. And what the next said will adjust policy to ensure inflation stays in of price stability. And if we want to summarize, Justin here summarized that the fact that he continues to allude to the franc having appreciated should be a signal that they will be backing off after having been suspected of intervening in recent markets weeks. The key takeaway from all of this is the change in the narrative from Jordan. In May, he said that a weaker franc is the main source of inflation. Today, there isn't any mention assembling that whatsoever. Instead, it has been the opposite. So it overall they were just trying to say that the last meeting he said a weaker in franc, and this meeting he said the appreciation in Swiss franc is really bringing down the inflation. And now with the current inflation staying around, I think around 2%, they are thinking to lower the interest rate. That's what they did. However, they also stated that they will be actively stay in the market to look for their currency, making sure that it does not get depreciated against other currencies, which eventually can lead to further increase in the inflation. So that was as a Swiss National Bank rate decision we had, and if we want to conclude what was the stance, it was a clearly dovish stance we had. Bank really surprised the market with the projections coming uh, lower than the March projections, and with that also the pressor, SNB chairman Jordan stating that uh, the appreciation is in the Swiss franc is still there, and that can eventually lead to some further weakness in the Swiss franc. So it was clearly dovish step that has been took by the Swiss National Bank. Now the last interest rate decision we had from the Bank of England, and it wasn't much of a surprise there, because I think they just went neutral. Okay, so from 65 analyst surveys show that the bank will hold the interest rate, and that's what they did. They kept their rate at 5.25%, with the vote 7 stating that they wanna hold, 2 stating that they wanna cut, and 0 stating that there can be a hike. So there is no talk on hiking. There's talk of cut or hold. So the majority of the voters says that there is going to be a hold for this meeting. And if you look at the article here on a forex, you're probably be thinking oh, I'm seeing so much articles from the forex live. Well, get used to it, because the forex live really provide insights about what is going on in the markets, with the articles like these. And they're free of cost, and anyone can go and check out, and can track the macro news about the markets. It's really handy and helpful. Make sure you have this on your computer. So let back to the topic. So, Bank of England leaves bank rate unchanged at 5.25% as expected. So, the highlightation was the prior was 5.25%. They stated the vote stayed the same as it was. Tingra and Rams then voted to cut by 25 basis points. Okay, and from some policymaker, decision today was finally balanced. Okay, so they took the neutral stance on their policy decision. So there has been some dovish comment. Let's just say Bank of England remains prepared to adjust monetary policy as warranted by economic data, will return the inflation to the 2% target sustainably, and will continue to monitor closely indications of persistent inflationary pressures. So the Justin also stated that in the statement they went a little bit dovish, hence stating this as part of the August forecast round. Members of the committee will consider all of the information available and how this affects the assessment, and that the risk from inflation persistence are ascending. And they also points to the notion that they are perhaps looking to tee up a rate cut some August should the data continue on its current trajectory. So overall, it was a neutral. We haven't had much to look for, because there wasn't any pressure after this. We usually have pressures after the central bank rate decision, but we did not had any. However, we are going to get one pressure from Bank of England next week, and we will go through after this review. So, from policy point of view, Bank of England, they pretty much stayed neutral. There wasn't anything new to look forward. It just seems to me that they just copied and pasted the statement, and there wasn't any major change, as these points highlighted. There wasn't any voter uh, moving. Let's just say 6 to 3, it could have been dovish, just stayed neutral, and they not changed anything. So it was overall a nothing but burger trade, and I prefer to stay out of the market when there is no clear edge to trade. So with that being said, let me just close this out because I don't need this anymore. So we almost gone through what we had last week. Now let's quickly look at what we are having this week. So this week it's not let's just say not get excited, because we are having very less data from US side. There is some data which can worse to watch, but I think I maybe I don't like to trade those data. So on Monday we are having a FOMC member Waller speaking on 4 a.m. Atlantic Standard Time. So from the past, we do have seen some volatility got created by Waller, but maybe we will see what he has to say. So Bank of Canada Governor Macklem speaking around 3 p.m. let's just say Atlantic Standard Time. Don't forget that all time stated on my calendar is Atlantic Standard Time. It's not Eastern Standard Time. So I just don't want to repeat myself because it saves the time. So at 2:45 p.m. we are having a Bank of Canada Governor Macklem speaks. And after that, next day we are having an inflation report from Canada. Market is currently pricing okay. They are we are not seeing CPI year of year, but just okay. So median CPI year of year 2.6% marking, seeing no change. And where we are from time perspective, okay, so we are seeing very sharp move to the downside, and if we continue to see any downside pressures, that will clearly align with the bank's expectations. And as we know from the last meeting, Bank of Canada already went very dovish from their statement, from their perspective, from their policy stance, as they cut their interest rate by 25 basis points, and they clearly stated that they will do more if they feel like, if the inflation continue to decline. So with that being said, on 11 a.m. we're having US side consumer confidence. We are having Richmond manufacturing index. Nothing, as I said, it's just not worth trading these manufacturing indexes. We are having CPI year of year, market expecting a bit down, but not that much. And the inflation is currently, because RBI is clearly stating that the main goal is that the inflation come back to their target levels within a reasonable time frame. And they said the inflation is not progressing as they thought. It's just really slow, or let's just say stubborn. I can't go back before 2022, because they started publishing this data at the start of 2022. We just have this much data. So according to this data, we had on January we had 8% inflation, 8.3%. We just came back to 35.4% at January, and after that it just been stickier and it's not going anywhere. However, we will see what data we get on this day, on Tuesday at 10:30 p.m. Wednesday, nothing major except new home sales. No, let's just forget about it. So, well, remember I was saying that there had no pressure after the Bank of England rate seasons. After that, clearly after that, this is the first time Governor Bailey gonna speak at 6:30 a.m. This is something to watch out what he has to say, because clearly the interviewer may maybe ask him some of the questions about the last raid season they made. All right, so final GDP from US side, this is something we don't pay much attention to, because this one is the last one. Market already priced in so many, because this is the third stage. If we look at the description here, there are three versions of GDP. Okay, First one is advanced, that's the most volatile. Then there is primarily, less volatile, and there's final, nothing burger. So there's no point of trading this data because it's the final, and I'm not very keen to look at it. Unemployment claims, I hope it goes out of its healthier range. It's just staying here in a 300 200, and let's just say 200 300 200 range, and there's no point of trading this if it stays in that range. Core durable goods, we will see if the actual numbers and the revised numbers came in line, then we can see some short-term scalping. On Thursday we're having a bank holiday from Kiwi, so I don't worry about that. It's just I think they're already gonna be unavailable during the US North American session time. And our last trading day of the week, we're not gonna have anything to look forward. Spanish flash PI year of year. We're gonna having GDP from Canada side month of month. Nothing I'm looking to trade. Core PCE, revised University of Michigan and revised University of Michigan inflation expectations from US side. Nothing major. And Saturday, of course, it's holiday. However, we're gonna get manufacturing PMIs and non-manufacturing PMIs reports from China. So as you can see, it's gonna be, let's just say, boring or quite weak this week. So with these weeks, it is very important to keep in mind that if you get bored, just don't start trading, because this is the time to keep the capital preserved, and it's better to keep it preserved rather than losing it. You might see some choppy price action in the markets because there is no major catalyst that can give a bias to any currency. And last but not least, before ending this podcast, I just want to thank you everyone for reaching at the end of this video. And if you have any questions, don't hesitate to let me know. Just comment at this video, and I will try to answer most of your comments, and I will try to do my best. And probably in the future I will start doing some technicals. I will just try to put together the macros and the technicals on the chart, and we will try to get some more information on a price action point of view. I understand that this is just one side of the market. There's also technical side of the market, and for sure we will start doing this, not right now, but maybe in the future. So thank you so much, guys, and I guess see you tomorrow when I will do some sentiment videos in the morning. However, just a reminder that we only do once a week these weekly analysis, and there are some more content coming, and it's on the way. Just wait for that, and stay with the Forgotten Money channel. Thank you so much. Bye bye.